If there is anything else more popular in 2020 after the words pandemic and immunity, it is gold. So, gold is actually one of the most popular words for 2020 when it comes to financial investments. So, if you want to know more about sovereign gold bonds, you want to understand what is it about and whether you should invest in it or not, what is the plus and what are the minuses of this product, and whether this particular issue, which is going to end on 4th of September, is a good time to invest or not. So if you are thinking of all these questions, you should watch the whole video, and it will be super awesome if you can also hit a like button there. Do leave a comment for us on this video, and we will try and answer them as quickly as possible. So now let's start talking about sovereign gold bonds. So why is sovereign gold bonds getting so much popularity, particularly this year? So honestly, bonds are released almost every year. Yes, it's just that you probably never bothered to look at. So there are two reasons that you are looking at it right now. One, you're free. You have a lot of time in your hand. And I think it's because of the extra time that you have in your hand, you are wanting to know about so many great products, financial products in the market. And I think this is the perfect time for you to work on your financial planning. And second, gold has seen a crazy run this particular year. And because of this crazy run this particular year, everyone is thinking, I should have invested in gold. I should have heard that friend of mine who told, yeah, January may buy in gold. Or last Diwali, I should have bought gold, But don't worry, even if you have missed the bus, there will be more opportunities that you will receive in your lifetime, right? So there is a lot of more years that we have to see. So let's start understanding about sovereign gold bonds. So this is basically a bond, it is like a paper which Reserve Bank of India issues on behalf of Government of India. So what does the Government of India and Reserve Bank do? They basically say, boss, there is too much liquidity in the market. Let's bring down the liquidity a little bit. Let's bring up, people are not investing really in the correct product, and it's not helping the industry grow, economy grow. So they at times would want to pull out a little bit liquidity from the market. That is where the governments will get into such issues. So now government says to RBI, please issue sovereign gold bonds on my behalf. So that basically means that it's technically Government of India issuing these bonds to you. So the authenticity and security of the product actually get 10 on 10 on this, right? So you don't need to worry about the authenticity of this product. Now, second, how much do you need to invest in it? So you can even start from as small as 5,000 rupees. You can buy one gold today, which the subscription which is going on, you can actually buy it for 5,117. So technically, it's hardly 5,100 rupees that you can buy one unit, which is basically 1 gram of gold. And obviously, if you have more flexibility, you can obviously buy much more, but the maximum is 4 kgs. If you're actually planning to buy 4 kgs, don't do it at one tranche, break it. I always say break your investments into small tranches. It gives you that averaging benefit. See, the last issue which was raised of this sovereign gold bond was actually done at 200 rupees higher, which was at 5,334 rupees. And this time it is being done at 5,117 rupees. So imagine if you've already bought all your gold in the last tranche or the last issue. So suddenly you are gaining 200 rupees, right? You're buying it cheaper, 200 rupees within a month. So why is it cheaper? Sovereign gold bonds derive their prices based on whatever has been the market price in the past 3 days. So the Government of India or the Reserve Bank of India says, okay, what has been the gold price, and averaging it out for the past 3 days, this is the issue price. So this particular issue is going to end on 4th of September 2020. So if you think by the end of this video that you would want to make and purchase sovereign gold bonds, you should make that investment. We will also very briefly tell you how can you make that investment. Okay, we've finished what is sovereign gold bonds and how much can you invest. Let's understand what is the tenure, for how much time do you need to invest. So there are two extreme answers to this. You can invest it right now and you can sit on it for 8 years because the maturity of this product is actually 8 years. What does it mean? That you invest in September 2020 and you can actually get the redemption of this amount or this fund in September 2028. Now you will say, okay, this is too much of a long tenure. So that is the redemption. So the longer you hold, the better it is, because yes, I do believe from 2020 to 2028, gold will rise. Whether it will rise sufficient enough for you to make sense of your investments, we will have to see. But it is a standard rule that all of us should have at least 5 to 10% of our portfolio in gold. Now, people who are going to get married or people who are getting their children married in the recent future can have higher portion of gold also. But if there is no such big event going to happen in your life, then 5-10%, maybe 15% maximum is a very, very solid decision to invest in gold. Now, this 8 years, what happens if you don't want to stay invested for 8 years? As soon as you invest, these bonds are actually tradable. So tradable in the sense they are sold, bought in the stock exchanges. So tomorrow, let's say in a year's time, you think, okay, I want to liquidate my money. Or let's say gold rises from today, it becomes, it just goes up by 20-30%. And you think, let me cash on the investment that I've made. You can just go ahead and sell it in the stock exchange. So you don't need to worry whether you need to actually, there's no lock-in period basically. Yes, it is suggested that you keep it invested for 8 years, but there is no lock-in period as such. But remember, if you sell it any time before 3 years, you will have to pay capital gains on it, which will be short-term capital gains. After 5 years, the Reserve Bank of India allows you to claim for early redemption or early withdrawal of these bonds. At that point of time, if you can hold this investment for 5 years, the best thing about this is no tax. So you don't have to pay tax when you sell this investment or when you redeem, but after 5 years or 5 to 8 years, whenever you actually do it. So the first thing which you need to decide is whether you can actually hold it for 5 years or not. If you can, then I think it's a great time to invest in this series, because for 2020-21, this is the last series. In this year, the government is not going to ask for more gold. At least as of now, that's what the plan is. Now let's come to one very strong bonus thing that this bond gives you. Now, as compared to all other investments mode or in gold, this is the only product which lets you have a fixed rate of interest. So you can have 2.5% per annum as a fixed rate of interest, which I think is super cool and gives you a great advantage over the other products. Okay. Now let's understand the last technicality about this product, which is how to invest in gold bonds. So you can just reach out to any commercial bank, you can just go to any nearest post office. But I think the best way to invest in sovereign gold bonds is through your demat accounts. So you can just reach out to your demat account and just go ahead and invest in these sovereign gold bonds. So that would be the best way to invest in sovereign gold bonds. Also, because if you want to have the opportunity of ever trading in it, so in sense, let's say after 1 year, 2 year, 3 year, if you actually want to liquidate it, having it in the demat form helps you liquidate that super quickly. It's just a click of button and you can sell it. But do remember, the volumes of these sovereign gold bonds are not very high when it comes to trading. So you may face a little bit of difficulty, but it would not be that like for 2 days you wanting to sell it and it's not selling. That would never happen. So do not worry about it. Now, the last thing that I really need to tell you, which I think is a super good bonus trip from our side, is that if you by any chance have missed this opportunity already and you think, oh, I missed the bus and I really want to invest in these sovereign gold bonds, you can go ahead and always buy the same on any stock exchange through your demat account. So just go to any website and look for sovereign gold bonds, and it will give you a lot of years. So 2020, 21, 22, 24, 25, 26, 27, 28. So this basically means a maturity or the issue year of that particular product. So you can still invest in it. So let me summarize this video for you. The biggest plus is its security and authenticity. It is a government issued bond, literally, okay? So let's be assured about it. The second is there is no tax, especially if you can hold it for 5 years plus. There's no tax on it, and which I think is super great deal, especially because it may save anywhere between 5 to 30% depending on what tax bracket you are. The third is the interest deal. So you actually get 2.5% per annum, which I think is the biggest interest out of all the gold investment products. So no other gold investment will be giving you a fixed rate of interest. So that's the third benefit. What is the fourth benefit? It is liquid if you're ready to bear the tax for it. So it's kind of that either you take the liquidity part or you take the no tax part. But if you're really in a place where you need to liquidate this money, you can always sell it in one of the exchanges and recover your money. That's the fourth biggest important. Now, what's the fifth, which I have not kind of spoken to, which is about if you have taken it in demat form, there's literally no storage that you need as compared to if you are buying a physical gold, right? So that again, I think is super great deal. Let's talk of some of the negatives. So what is the biggest negative? You have to hold it for a long period of time. So the real value comes in where you actually hold it for 5 years plus. That's the first biggest negative. What is the second biggest negative? That it is extremely related to gold. So, and the performance of gold, you have no control on it. So if gold is ever falling, this will also fall. And it may happen, especially with the current pricing that is there on the gold, that you may see that your investments are actually losing money in maybe a year or so. But in the longer run, you'll see that you will be making a decent amount of money. Third, they will never give you a windfall gain. So never expect a windfall gain on this. So these are some of the negatives that sovereign gold bonds had for you. If I have to invest in it, I will just look at whether I have 10% diversification in gold bonds or not. So if I have already invested anywhere around 10 to 15% in gold out of my overall portfolio, I would probably not be going for this investment. But if I have not done that investment, and if you have not done that investment till now, this is a very good opportunity, which is closing on 4th of September. So that is the most important thing that you have to keep in mind. And nevertheless, if you still miss the bus, make sure to buy it as soon as the product starts getting traded on the exchanges, or even you can go ahead and buy the other gold bonds, which are sovereign gold bonds, which are getting traded on the exchange. So I hope this must have given you all the details about it. We here at this channel are trying our best to unlock financial literacy for you so that we can teach you every day with every video something new and make you more financially independent. So this is Swati Singhania. Namaste. Have a great day.